Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hello, everyone. Sorry, it's not Phil Tarrant with you today. It's Grace Ormsby with you again. And it's now officially less than a month until Christmas. I can't believe how quickly it snuck up on me. I don't know if anyone else is feeling the same, but it's been an absolutely insane year. So for many Australians, I think, we're pretty excited to have a bit of a slowdown and a change of pace, a chance to spend time with family and friends that we maybe haven't seen for a lot of the time this year because of lockdowns and the like. But it's just a chance to forget about the stresses of everyday life. But while we do slow down, that doesn't necessarily mean it has to derail your property investment journey. So that's why I feel like it's the perfect time to welcome a guest, an investment property expert, and someone who is very, very well known to this SPI podcast network, to the show today. Sam Gordon, welcome.
Hey Grace, thanks for having me.
You're welcome. Sam, you are an expert property investor yourself and you are a buyer's agent. It's safe to say that you know a lot about the industry. I mean, you'd be living and breathing it, surely.
Thank you. Yeah, definitely living and breathing it. It's the old 7 days. Doing some pretty long days every day. Definitely live and breathe it. Love this career, that's for sure.
So how do you generally approach the rundown to what is traditionally a bit of a quieter time of the year?
Look, I've got actually a funny approach to it because a lot of people look at it as a rundown or a slowdown. I've kind of got three parts of it for me personally, but my favorite part is actually trying to snag another deal before the end of the year. When a lot of people kind of switch off, they go holiday mode, they got their Christmas parties and whatnot. I get out there and try and actually buy. I can't even remember the last year that I didn't buy a property just before Christmas. There's always someone that's looking to sell. There's always someone who wants to get it wrapped up, get a contract go unconditional before Chrissy and kind of, have everything set out for the next year. So that's my first thing that I like to try and take care of really is to snag another deal because there's always something good out there to pick up. For
sure. And, what does that actually look like? How much do you think it is worthwhile for a property investor to not turn around and go, I'm just going to leave it for summer. We'll get back into it next year?
Well, I think probably majority of my best deals would have been just before Chrissy. So obviously got a fair few in the portfolio now and I can think of some real crack that we picked up just before. It's a lot of the heat goes out of the market in that December period because, as I said before, people kind of switch off and they go holiday mode. But there's a lot of people that may have either been sitting on the market for a while or they're a bit worried about coming up to Christmas. They may have a vacant property. They may be ready to move into another one. And, this sale's linked up to another one. There's a lot of different factors that can kind of come in there. And, where a lot of people might be looking for a 5% discount, if you go really, really hard and put a lot of offers out before Chrissy, that could turn into a 10%, 15% discount. If you throw enough offers out there, something will stick, that's for sure. And it's a practice that I've always stuck pretty close to every year. So.
Yeah, and that's a pretty sizable discount. A lot of people are looking for bargains around Christmas time anyway. There's a lot of things that people are thinking about. So then flowing on from that, I guess, what are the weeks that are kind of the best time to get in? Because I'm imagining if you get too close to Christmas, the agencies close and things like that.
Yeah, they certainly do. So the immediate week before Chrissy is a little out of the question. Like you can sometimes snag stuff there. I'm always working literally till we're hitting pretty well the day that they all stop taking new calls pretty much. But there's a lot of agents, they'll kind of switch off and a lot of owners kind of, if it's not right, if it's that right couple of days just before, it does not work so much. But those first 3 weeks of Chrissy, I've always found, first 2 to 3 weeks are always, you can go really hard in that time frame.
So then what does it look like for anyone that does actually buy over that time? Settlement periods end up being into the new year, things like that. Are there any special, negotiation tips that you have or things that you kind of bring to the attention of both buyers and sellers at that time that helps get deals happening?
Yeah, I think the strongest one you can probably do is unconditional contracts. So if your finance and everything is sorted and you don't need the finance component of a contract, and you could do a building and pesting cooling off or something like that, that can be a huge advantage in a situation like that. Because if you're 2 weeks out from Chrissy, there's a really good, or even a week out really, there's a really good chance you could go uncon before you hit it. That's a very attractive terms that a lot of sellers would seriously look at taking a bit of a hit. And even if we're talking even just 10 or 20,000, like 10 or 20 grand, it's a very good saving if you can make it for simply putting a deal together and structuring it in that way. But in terms of settlement doesn't worry. It doesn't matter too much. As long as you have the contract rolling and everything, everyone's pretty respectful of the fact that most conveyancers, real estate agents, everyone normally has that at least kind of 2 weeks off over Chrissy. So then, you slap something, a contract on something mid-December, you're going to be settling mid to the end of January anyway. So there's never really too many constraints around that.
And you alluded to a little bit that people actually want cash at Christmas. So if you're able to guarantee them that, of course they're going to take that kind of offer.
Yeah, people love it. It's a pretty strong offer in most markets as it is, regardless of time of year. But yeah, straight before Chrissy. There's just a lot of people, they may have been going for a lofty price. A listing may have turned stale, or for whatever reason, they just really would love to have it done and dusted before that time. And yeah, it's definitely a very opportune time to be an investor if you can get out there and be pre-approved, ready to go, be strong with your offers. It can be a very lucrative time to be in the market.
Well, I hope our listeners are paying a lot of attention here because, there's lots of tips that you've already handed out already, but we're going to take a quick break. We'll be back very soon.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back to this episode of the Smart Property Investment Show, where I'm joined by Sam Gordon, who is one of the biggest names in property investment in Australia. And Sam, you've just told us all about what people can expect and investors should be sort of looking for at this time of year. And I think it sounds like a very, very exciting prospect. I feel like, especially going back to around March, when we thought the property market was going to, go straight down. A lot of people were really, really worried. That didn't end up kind of happening at all. What have you seen in the last few months? Spring selling season is generally a really big time of year. What, from your perspective, happened? And I guess how will that flow through to what actually happens around Christmas time this year?
It's a really funny one, Grace. And I actually haven't been on a podcast since everything first locked down. I went on a podcast just then with Phil, just when everything kind of happened then.
That would be a really interesting look back.
I was having a chat to a couple of the SVI's boys about this, and it's really funny because I called it, like I'm pretty proud of the prediction I made because I thought there was going to be about 6 to 8 weeks there. I'm pretty sure I said 6 to 8 weeks. I might have said 4 to 6, but it was 6 to 8 weeks there when no one was around and it was an absolute buyer's market. And if you were gutsy enough to go out and buy in that window, you would have absolutely, you'd be reaping the benefits of it right now. And then what happened was the stock tightened up. So the people who didn't need to sell and couldn't get the money they wanted, they pulled their listings off. People who are uncertain didn't go to market. Or everyone that needed to sell at that point had pretty well sold. And most of the time they'd sold at that bit of a loss. And then the market kind of reached that equilibrium, that balance. And then when that petered out and went further and further through, and people realized that they weren't going, that COVID wasn't the end of the world. The world wasn't going to go into this ridiculous shutdown. Melbourne might have for a little while, but everyone else pretty well went back to normal after a couple of months. What happened was a lot of buyer confidence came back, but the seller uncertainty remained. So a lot of property not much property at all has come to market, but there's been this huge influx of people trying to get into the market. A lot of that has been home buyers, and a lot of it is first home buyers as well, trying to get out there, get into the market. I think what a lot of people overlooked is how low interest rates are at the moment as well. It is so much cheaper to buy a property than it is to rent in so many locations across Australia. And yeah, I think it was just that kind of direct correlation there that led to the market as it is. And it's still the same now. So there's still a bit of uncertainty around selling, but there's just this absolute crazy force. And we've really seen it in the past probably 6 to 8 weeks, especially the amount of people that are out there in the market right now trying to buy, and the lack of quality stock coming to the market. And that's just, it's a natural precursor for a boom. I know a lot of people are talking talking about a nationwide boom. And I think a lot of the country is going to go into that if more stock doesn't come to market. And a lot of people were talking about when the stimulus winds off in March, there could be a bit of a glut of mortgagees or anything like that coming to market. But they were also talking about that in September. Yes, they extended it. But I think with interest rates as low as they are and the economy having returned to a pretty good point as it is, and we're still probably 4 months away from that happening as well, I think these conditions are going to continue. I think we're looking into there's a lot of capitals and there's a lot of regionals as well that have been on the cusp of some strong growth for the last little period. And I think this is really going to push that into overdrive, and really where we may have been 12 to 24 months away from that actually coming to fruition, I think it's brought it forward, and we're into those times now. So there's a lot of people that were sitting on the sidelines and thinking, I'll wait till March, I'll wait till, when all this stuff rolls off. You're going to miss a boat if you wait too much longer. It's moving. It's definitely not a hanging tide or falling or anything like that. It's definitely going the other direction.
Looking back at previous Christmases, what are the patterns that normally arise with, potential buyers dropping off and things like that? Do you expect to see that same thing this year, or is it going to be a bit different because it has just been such a weird year?
It's a little bit of an unknown. I think the lack of stock is really going to be the big determining factor there. It may be the closer we get to Chrissy, that's where that little bit of opportunity may remain in that little window closer to Christmas, because there are a lot of people out there at the moment and there isn't a huge amount of stock around. But that being said, a lot of people do switch off. A lot of people go on holidays. They're more, they get to that point. They may not have bought anything yet and they're like, oh, it's Christmas time. Let's just enjoy the holidays. We'll worry about it in the new year. And then they go on holidays in Jan as well. So then they worry about it in Feb. So there's that window there where a lot of people switch off, a lot of people go missing, and there's a lot of people who want to sell. So that's where that opportunity is for sure.
And then, that boom that you're predicting, what will that mean? Like, how do you think that's going to change property investing, as it's probably looked for the last couple of years? What would you be saying to investors out there listening right now? Will the opportunity be completely lost? Like, is there kind of an endpoint at where it's actually worthwhile buying investment property?
It's a very hard one to call. We've never seen this before. Like, it is literally a nationwide housing shortage of stock. So it's a very, very hard one to call of when
and
does
you wouldn't
more
want
stock
to
come?
either. You wouldn't want to be the one responsible for that kind of projection. But it is, I guess, a question that people need to think about.
Yeah, I would just say, there's a few things to really take into consideration. It's where are you looking to buy? So if we're talking Sydney or Melbourne, and I hold quite a fair amount of property in Sydney, I would not be looking, personally, I'm not looking to buy in Sydney because Sydney and Melbourne had such heady peaks, such large booms in the mid-2010s. Those markets, in my mind, are at a very, very high peak. And the housing shortage, if anything, is just kind of keeping that market at a nice level and, it's bubbling along well. But if you look at the other capitals, and there's a lot of regionals that haven't seen growth for a decade or more since the last booms for those areas, which may have been the late 2000s, there's a lot of other locations and localities that haven't seen significant growth for a decade. I would be looking into those markets and then just learning them really closely, like we obviously do about our areas, knowing what a property is worth and just being really, really calculated. So when the opportunities do come up, you're paying a really good price for it, not getting sucked into hits the market. There's 8 offers on the table. Let's get in the highest offer, because there's a lot of multiple offer scenarios going on right around the country at the moment in a lot of good locations, and people are getting a little silly with prices in that regard as well. So it's just being very calculated. You be calculating, you buy it for what you consider good money. You can't really go wrong, because if the boom does come and does eventuate the way a lot of us are kind of predicting, you set yourself up really well. But yeah, if you have paid good money for it, you set yourself up really well. If you pay overs thinking you're beating the market, that could come back to bite you.
Some sage words of advice there, Sam. We'll take another break, but we'll be back very soon.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back to this episode of the Smart Property Investment Show, where we're joined by Sam Gordon, who's been giving some great advice and insight into, what people should be doing over the end of November, through the beginning of December, I guess all the way through the holiday period. And I guess distilling it down to its very essence, Sam, would be that it's just you don't want to switch off as a property investor. There's sort of no real good time to, you can still have a break, but you still need to be paying some attention to what your properties are doing. So, what do you say to people about preparing for the future? And, how can people use the time effectively, when everything is kind of slowing down and they've got some time to actually spend talking to, business partners, family, friends, things like that?
I think it's a really good time to plan out your next 12 months, like plan out what you really want to do next year. It's a really good time to reflect and have a look at how your portfolio has gone so far this year. Is there any little changes you may need to make in it that you may have overlooked because you might have been really busy through the year? But then I think it's a really good time to plan for what you want next year. Be it your first property, or are you taking your 1 to 2 property portfolio? Are you going to expand on it? How are you going to expand on it? And really build a strategy around what you do want to achieve in the next 12 months that fits into your overall portfolio game plan. So that's one thing we really talk about a lot is that overall strategy and game plan in terms of the long terms, but you also need to look at those short terms. So it's a really good time as well because it gives you that 12 months to work towards. So when we get to the next holiday period next year, you can reassess and see if you hit those goals. Did you exceed those goals? Did you fall short and why? It's a really good way to really plan it out. And it can all come back to even having a look at how much, say, available equity you currently have in your portfolio, how much cash savings you've got that you could put into deals. And then where does that lead you? Are you going to pay market value for a property you can't force additional value on that gets you stuck? Or are you going to buy something, get a bit of a discount on it and force some value on top? So you've got equity there that you can tap and roll into another deal. There's a lot of things there that I think if you're really smart and put your time into it, it also should give you some time to research locations where your budget might be able to get you in. Yeah, I think it's a really good time for that. It's something I've probably done. I think I started doing it when I was about 25 or 26. And yeah, in those last 4 or 5 years, that's where my portfolio exploded when I really looked at how I can essentially go close to doubling it every year. And then what are those accelerated strategies I can use and plan it out? And it really does change a lot of things. If you're shooting from the hip, it's a lot more haphazard and a lot slower than if you actually set out a really, structured game plan for what you want to achieve.
Does that then, creating that game plan, I'm imagining you have to check in more than once a year. Does that provide you with those monthly, sub goals or, milestones that you want to be getting at?
Yeah, definitely. So you'd be looking at timeframes of even looking towards pre-approvals, and then again a timeframe of how soon after that pre-approval should you have purchased. And that shouldn't make you be like, I have to purchase within a month or something because you'll probably buy the wrong property. But give yourself a realistic timeframe that you're able to purchase in, settle. If you force value, how much time are we allowing for the value add? And then the refinance period, which is normally 90 days post-settlement, you can refinance. And then again, how does that structure and how does that really look across the whole year? So yeah, I definitely break it down from there. The 12 months is more of that overview of what you're looking to do. But then, how do we break it down to smaller little kind of chunk sizes? And it gives you that game plan to really work with.
I'd like to bring up something that you talked about earlier, and then I think it ties in well with what you just said about you don't want to rush in and buy the wrong property. What are some of those things that are important for people to be looking for at the moment, especially if there is a shortage of stock of good quality properties?
It's learning market value. So that's the biggest thing. There's a lot of people, they hear, the media changes all the time what it says is going to happen, right? We saw a few months ago, the banks were predicting, or 6 months ago, predicting a 20% drop. Now they're saying a 10% growth, all the rest of it. There's a lot of people, there's a lot of ability to get caught up in that and just to rush out and buy something. Look at properties for 2-3 weekends and look on REA for 2 or 3 weeks and then think what something's worth. It does take a lot longer than that. There's ways to kind of fast track it of even looking at sold data and really seeing what things have actually sold for and doing it like that. But being on the ground, spending some decent time actually reviewing and seeing what things are worth, learn that market value. That's the absolute key thing, because then when something pops up, is it actually market value? Is there a reason why it's actually cheaper? Is it in a dodgy pocket or is it in a good pocket, but it is actually just a good price? And when you learn that and when you're doing it on a consistent basis, you will learn what market value is. So then you can really quickly spot what good value is so you can act quickly, because one of the biggest things in a fast-paced market is the ability to move quickly on something that you know actually is good value. So that's probably the biggest thing, because that's going to stop you from getting burnt, paying more than you should. Yeah, and kind of, as going back to what we were saying before, potentially buying something that might come back to bite you. So
before we do wrap it up, I'd like to turn it back on you and see, what are some of the strategies and things that you're looking for in your properties over the next 12 months? And then even sooner than that, what are the kind of things that you want from a property if you're trying to snap it up before Christmas?
Yeah, definitely. Well, I've actually had a pretty aggressive accumulation this year as well. I've picked up 4 already this year, probably in the last 8 months, and I've got another one going through at the moment. A lot of what I've been doing this year is making, since COVID hit, I had a bit of a feeling that it was going to be a little bit of a decentralization away from capitals. So looking at areas that may really benefit from that. And so I went quite heavily into those areas, and we will still go quite heavily into those areas next year. And it's really looking at layering. I love layering strategies. So depending on where that property fits into my portfolio, is it a long-term hold for cash flow, or is it a below market buy that we can add some value on, but I'm holding it through a growth cycle. So when it doubles, I can sell it down to reduce debt on the cash flow side of my portfolio. It's really figuring out those properties that I need in my portfolio. I set out how many I want and the different deals that I want to accumulate. Then I'll go and pick that. But yeah, it's so a lot of what I'm doing at the moment. I've got a development going through that should be finished, say, start of next year. But a lot of what I'm doing is that picking up below market in an area I think's got really good potential for growth, value adding on everything, and looking to layer. And obviously, my manufactured cash flow deals as well. They're probably my favorite piece of the puzzle, favorite portfolio addition. So,
and it sounds a lot like you really heavily focus on that diversification, which is one of the tried and true methods of investing anyway. So it's really great to hear that, just because you are buying property, it's not with one purpose. You've got to keep that in the back of your mind as well as a property investor, that there are risks still involved, even though it is bricks and mortar. Is that fair to say?
Oh, 100%. And I think it's exactly as you say, diversity is key. So if you look to diversify the portfolio and have a certain part of the portfolio that is there to sell down, there always needs to be an exit strategy. There always has to be a way to de-risk the portfolio. And I think that's what a lot of people overlook. There's a lot of people with like a 30-year plan for real estate, and it doesn't need to take that long. Like, you can quite easily, if you invest intelligently, you could quite easily get there well within 10 years if you do it smartly, invest in the right locations, and then look to de-risk where you've, say, had the growth. You can sell down to de-risk a cash flow side of the portfolio. And that's what we really look to build. And I guess that's what I kind of stumbled across in my mid-20s when I kind of employed those strategies, and it really paid off for me. And I guess that's why I kind of learnt it through the school of hard knocks sort of thing. I learnt it from my own experience and then kind of applied it, so kept applying it to the portfolio myself, and now obviously applying it for other people's portfolios as well.
Sam, I feel like everything you've said today here has just been like amazing advice after amazing advice. So I feel like we're actually really gifting the Smart Property Investment audience a bit of an early Christmas present with this. Thank you so much for your time today. We really, really appreciate it. And we can't wait to hear what comes next for you. Keep us updated with what you do end up buying before Christmas.
No worries, Grace. We'll do. Thanks again very much for having me on board.
To everyone listening at home, if you enjoyed this show, please leave a review on whatever platform you're using to listen in, and be sure to subscribe if you haven't already. If you do have any questions for the Smart Property Investment team, don't hesitate to reach out. We're available on our social media channels or at editor@smartpropertyinvestment.com.au. But until next time, stay safe and well. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are you in the real estate industry? We're on the lookout for Australia's best agents, networks and property managers to enter the REV Awards 2021 with principal partner ListReady. The awards provide an invaluable opportunity to showcase your contribution to the industry, raise your profile on the national stage and celebrate your achievements with your peers. Nominations close in November. Start your nomination now at realestatebusinessawards.com.au/REV-awards.